The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when a lone fisherman in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Hi, everybody. This is not Steve Rhodes. This is Basil Chapman sitting in for Steve. Steve is out. I hope whatever it is that he's out for, everything goes well. And my pleasure to be here. Usually I am on 11 o'clock Eastern Time with my open, this is my Trader's Corner, Monday through Friday, 11 o'clock till noon. But today being Friday and being asked to sit in for Steve, I'm here at 9 o'clock, so I'll be here 9 till 10. Then the Money Masters show will come on with Tom O'Brien. Tom O'Brien will be joined by Daryl Martin, and they'll be talking about the diagnostic trading program that Daryl has designed. Absolutely fabulous program, just a terrific way to be able to garner profits, knowing exactly what kind of losses you could take. There's also a new newsletter out, and that's by Andy Hecht. Go to the front page, check it out, and you will find that Andy is someone who's been in the pits. He's done just so much in terms of the commodities. His explanations of what he looks at as far as commodities is concerned is really quite unique. We don't often hear that as let's say lay people, even though we do charting. I'm a lay person when it comes to knowing about commodities, which commodities are best to track, what seasons, etc. So he's got a new newsletter out, and yesterday I heard him talking about the monthly gold-silver ratio and the weekly silver chart. Fascinating, really terrific work that he does. So I just wanted to mention that. And the number to call, it's just the same number, 877-927-6648. What is my service? Well, my service is called the opening call. And what's important about knowing the title, the opening call, is that I start coming out very early in the morning, sometimes 6:15, 6:30. I start putting up my charts. Actually, let me just show you what I do. I go to, this is the Dow chart. I go to the Dow chart and I show all the techniques that I use within the Chapman wave. There's a technique. You see that LS and RS? Well, what does that talk about? In my CD introducing the Chapman wave methodology, there are a number of techniques. Actually, I'll show this because this slide here is called the falling axe pattern. It's just merely an expanding cone. Look, you see this? Well, actually, this one's better. You see that design there where you've got a trend, you've got a long move to the upside. That's the handle of the axe. Then the axe has an expanding blade, and look, it's a declining cone with lower highs and much lower lows. When it breaks out to the upside, very often you can get a one-to-one expansion. Wait a minute, one-to-one expansion? Well, look what we've just done here. We've broken out from that same pattern. Can there be a one-to-one expansion from the 14,551 area to the 15,000, say 100, 600 point, and then take it from that line up 600 point to 15,700? I don't want to really talk about the upside at this particular point, other than to say in the Chapman wave methodology, what we look for is a trough that we can start a move. That's the low point that you can, a most identifiable low point that you can start a move to the upside and count at least 4 successively higher peaks. There's peak A, capital A. On the way down we go lowercase, uppercase on the way up. You can identify it immediately as an uptrend. B, We're in leg C at 15,483 was the high yesterday. Well, wait a minute. 15,542 was the all-time high. Now, what's really important about that is that when looking at that particular left side, you see there's a left side, this is in red, and then there's a right side price time match, and that's saying that by the 15th, so early next week, there should be an attempt to touch that 15,500 area. And it'll be an exact left side to the right side price time match with the most identifiable candle as the midpoint. And even more importantly is these techniques that I use. This is the MACD, the moving average convergence divergence, is expanding, is still very strong. And the slow stochastic is at 91%, over 80% I regard as fabulous. Every book that you read will say over 80% is overbought. They use the term overbought. When you hear overbought, it's like saying overpay. Doesn't that imply that you're paying too much? No, no, no. It's not overbought. That's exactly what you want to see after all. Remember gold? Some of you might remember there's such a thing called gold. Well, look at this. When I look at this, go to the GLD. The GLD was way down. And the oversold area, if you want to call it oversold, but that's not a guarantee. It stayed there. Look at this weekly chart. The weekly chart was under 20%. Every book that you read on the stochastic, slow stochastic, will say that under 20% is oversold. You can stay oversold for a very long time. Look at this. TNX, I believe I'm going to look at. No, I do not want the TNX. Oh, yes, that's rising. Look at this, TLT. That's what I meant. Look at the TLT. It's been stuck in the single digits for a long time here. So until it swings and goes back over 20%, it's in the sell zone, or in the, not the cal zone, but in the area that is the weakest. Now, there is an attempt to start a rally, and I'm going to go into all of that in a moment. Just let me tell you that yesterday the Dow closed at 15,460, the S&P closed at 1675, Comp Index closed at 3578. Now, gold is down $6. It was down about $10 before at 1273. I will do this for the moment. I will go to the gold contract, GCQ13, and I'll show you something that's very interesting. There's a pattern that I talk about very often. It's called the H pattern that goes to an M pattern. It's a little bit more identifiable on the GLD. You see that little gray? If you're looking at TigerTV, I'll expand it. So this is the daily chart. Whenever you see my charts, the one on the left is the daily, one in the middle is the weekly, one is the monthly. Look, in one package, I can see the whole. The monthly looks horrible. The technical indicators in the monthly are just, the MACD's expanding, the stochastic's still very low at 14%, with no chance yet of turning around unless there's a fabulous move up in the daily, which will help the weekly. The weekly MACD is just starting to flatten out. It's not yet good. And the slow stochastic is at 10%, even with the big spike up yesterday. It is pathetic. So the daily is going to have to help as much as possible. Can it do that? Sure it can. But there's that H that goes to an M pattern. In my CD introducing the Chapman Wave methodology, available only at TFNN, there's a pattern that I used to call it the dreaded H. I kind of leave out the dreaded part of it. There was a good reason at the time for it, but the implication is, it doesn't give the right implication. But basically what it says is that you come down and those scallops, those arches to the downside, can break the left side support and then keep going down until there's a moment when it starts to form an H, sometimes a larger H, which becomes an M, lowercase h, lowercase m. Arches that keep retesting the lows. Wait a minute, isn't that what we've just seen here? Absolutely. Look, one case with a long sideways move of about a month and a half at 150.84, testing, then it breaks to 149.44 on the GLD, slumps to 143.43, and then gaps down to 130.51. Then there was a technique that I've developed over the years where I use volume, but I use it as a climactic volume spike. And what I'd said the day that it was happening, especially the following day, was that, you know what, with this technique, you can get a rally. It's not points, it's percentage at its time. And that rally can last between 48 to 58 sessions. Usually it works in daily, can even work in weekly. It does not work in monthly. time frames. Well, look what happened. You got a climactic volume spike at 1.35, and it took you 46 sessions before it smashed to the downside, going to 123.33, and that was on the 20th of June, continued lower to 114.68 the other day, and then it had it had a little tiny arch, and my big thing was, even though in my opening call, that's my daily service, my newsletter, we went long a gold stock the other day, metals, I should say. And what has happened is that 140.68 was forming an arch. That's a peak A right there. I call it gray because there's a gray A underneath the major heavy, sharp stair-step declines. And then what I'd said is, unless, and this was on 2 days ago, I said, unless by the end of the day or tomorrow, and who knew it would happen, there was a very strong spike above that arch formation, above 121.95, This could fail and just have a whole bunch of retests making an arch formation between a trading range that is not very big. Well, yesterday you had a big spike up, and the GLD went to 124.36 as the high, close at 124.24. Right now it's at 123.24, down 1, and it's the start of a move to the upside. I'd like to trade it, which is what we're doing. But I want the weight of the evidence to say, because after you've come smashing down like this, unless there is just a continuous day-to-day extended move in a V-shaped pattern, taking back all the losses that it had and making those people who got out over the last 7 to 20 or 30 bars look absolutely foolish after holding and holding, they're eventually selling what might turn out to be a significant low intermediate term. This so far is okay action, but I would not call it great. The day is young. Sometimes on a Friday, not sometimes, very often on a Friday, you get huge selling in gold. I'm just going to have a sip of tea here. There you go. You have huge selling in gold, and then the Monday kind of repairs some of the damage, but not enough because it continues lower. This would be the first trend change we're getting, and so far, my impression has been that you've got, let me just run the numbers here, you've got the gold is now only down 5, high-grade copper is down 1 at 3.16. That copper's trying its best. It's just stuck in this range. Bonds are up 23. It's a very interesting sign. And the dollar is up 0.40. Let me show you the dollar, because this is really important as far as I'm concerned. The techniques that I use, when that fast-moving average of the MACD, this green line, turns down sharply, it's usually a hint that you've got to be real careful. But it could also move up and make an M pattern. And that's what we're going to be watching in the dollar in relation to gold. I'll be back. Basil Chapman sitting in for Steve Rhodes. My pleasure to be here. I'll be back also with Mike in Long Island. And let's see. We haven't got anything much here. Let's see the futures are. The S&P's down to Dow futures -1. I'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back. And let's see. Futures are now down $1.50. S&P, that's the S&P futures, and the Dow is down -2, just nothing much. Everybody's just in holding position right now. And we've got Mike from Long Island on the line. Hi, Mike. How are you?
Good. How you doing, Basil?
Very well, thank you.
I got a question for you before we look at the stock.
Sure.
If we make quick peaks on the monthlies, is that bearish or... You had mentioned something about that.
All right. That's a very good question. Now, I'm going to do this. Let me just finish up this chart right here. I'm going to just put it right across there. And now I'm ready to answer the question. There are a whole bunch of things that are going on right now. And I'm not sure quite how to explain it in a very brief period. I'm going to do this just so that we've got a lot of new listeners to my particular technique, not to Steve's, of course, because they listen to Steve all the time. But what I'm looking at here is in the Dow chart, using the premise that I initially promulgated and I spoke about in terms of the Chapman wave identifying the lowest low bar and expecting at least 4 peaks to the upside. There are a couple of things that are happening. If the Dow goes above 15,542.40, it just has to go to 0.41. That starts leg E up in the weekly chart. This is the Dow. But it's not official an E because I've had to use something that I call the Chapman Wave Phantom Peak. So if you don't mind, I'm going to just skip that just for a moment, that weekly chart. I don't believe I'm incorrect because it's my technique and this is the way I interpret it. But I'm going to skip it for a moment because it's way clearer. The diamonds, in fact, are clearer, which is not the root. The diamonds are the trading vehicle for the Dow. But in the monthly chart, when we've seen a quick E to F, say, back in 2007, that was the end of that move because it was a doji close and a peak F in the Chapman wave. There are certain techniques we use that December the 31st when the Dow closed under the 9-period exponential moving average and the stochastic was failing, a right shoulder failure pattern. That gave the major sell signal. When you went quickly from C to D back in December of 2004 to March of 2005 at 10,984, that was a sharp pullback, but only for 1 month, and then it continued higher. So, but that was a very quick C to D. There have been other times that you've gone C to D to E, and that was that whole extension back in 2009, January of 2000. I'm sorry, 2000. I mean to say 2000, where the monthly went very quickly. In fact, all the peaks, A to B to C to D, and then to E, were very quick, and that precipitated a very sharp decline from 11,749 to 71.97. So now let me do this on the S&P, because that is a great question. And since probably I've got some new listeners to at least my interpretation of markets, it's a great question to explain something. Look at the quick D to E, the same thing in the S&P monthly chart that occurred back in December of 2012 to March of 2005. And then July of 2007 to the October high of 2007, you got a quick D to E. Then a quick C to D in 2011 at the top. That was the April high, April-May high. And then you've got peak C, and there's a really good chance that we've got a very quick D to come. I'm in a way, I'm pleased you brought up the question. In a way, I'm not pleased you brought up the question, because it's putting a tremendous burden on me in the sense that in my technique, once you get to leg D, that's where the yellow light flashes. It doesn't mean to say that that's where you could have your sharpest decline. It's just saying, hey, that is where sharp declines can very often be precipitated. So it's a fabulous question, but we're only the 11th of July. We've got over 2 weeks to go.
All right.
So we might not even make peak in the S&P or the Dow.
Right.
If there is a failure not to break above 1687.18, sounds ridiculous that we can't, that we've got a whole month to go and you can't go those extra 1.5, 2 points. I'm absolutely sure it's going to happen. So that's a great question, and I'm going to say the answer is yes. And then I want to go into some other things, and of course the stock that you'd like to talk about. So we've got Mike in Long Island. We've got a break coming up. This is Basil Chapman sitting in for Steve Rhodes, and I'll be back straight after these messages. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Whoa, bang, 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 that's the bell. Oh, we're open. Oh, that's what Steve always says. And we're off. The Dow is up 18 at 50,479. Now, I have a technique that I've developed over the many years. Been developing these techniques decades, and one of them is I call the Chapman Wave Trend Gauge. It's really based on Richard Arm's Trend Index. It's just numbers that I particularly choose to use. Well, that index gave an indication yesterday that regardless of what happened yesterday and regardless of any strength that you might see overnight, there should be anything from a very slight pullback to a deeper pullback in the Dow before there's a rally, and the Dow should go to negative, even if it's just a fractional negative. Well, that's what it did this morning. So once again, this indicator worked its magic. My suspicion, and what I said to subscribers this morning, very comprehensive report in my opening call, is that I do expect that there'll be a doji type close today. I could be wrong about that. There's a lot of strength in there, but I suspect that in the end there'll be a balancing between buyers and sellers towards the close. Well, let's go back to our caller. We've got Mike in Long Island. So, Mike, that was the story there. The simple answer is yes. Very frequently, when you go quickly from C to D or D to E in the monthly charts, you are vulnerable to a pullback. It's a lot more complex than that when I do it as I did for subscribers when I showed both the Dow and the S&P with what happens in monthly charts in leg C ever since 1994. So that's my reference point, and that's one of the reasons why I was very quick 2 weeks ago when the market turned around on that Monday from being down to up. Because of that falling axe pattern having held support, as well as the fact that their monthly chart said, whoa, be careful, this might turn into a better rally, is to have only long positions. It's only today, in fact, that we've gone to the short side on a particular stock. Otherwise, we only have long positions, and everything seems to be working very nicely so far. So, well, let's go back. You'd like to look at what stock?
Molly Corp.
Okay, so Molycorp MCP, I think they're into molybdenum. That's molybdenum. It's they do it's rare metals. I remember Dave White. Yeah, Dave White, folks, is our tech guru here at TFNN. He also has 2 newsletters. I remember him talking about this way back when nobody even knew what a Molycorp was, and great prescient discussion, and I think he even had fabulous trades on this MCP. Well, it had gone from the IPO of about $12.10 in July of 2010. It had a little bit of a run. It ran up in the monthly chart all the way to 79.16, peak C minus. It failed, made a pattern that I call the Eiffel Tower, straight up and straight down. Looks like a capital A, uppercase A. Came back, went underneath that, went down to the 8s. No, it went down to $4.70 back in 2013, earlier this year. And we've got peak A at 7.92 in May of this year. And now it's pulling back. And if it goes to 7.93, it starts leg B. But in the monthly chart, this is just nothing. This is pathetic. This is like not even a hiccup. The weekly chart, though, is showing a propensity here to want to push to the upside to get into this candle, this little doji candle of of February of week of the 8th of February of this year, between 8.17 and 7.25, and the weekly chart, the daily chart concurs with that, because we have just started as we speak, I believe. Yep, this is leg C up in the daily, and there's a left side, right side price target. I don't know if I have time to actually do it right now. I'll just do it visually. That says by about the middle of next week, if this is able to continue and hold today's gains, and preferably hold the gains into the close above 7.15, I would say preferably 7.24.25. That would be fabulous. Then there's a chance that within 5 to 7 sessions, it'll start to get to the candle high of 7.90 back on the 21st of May. If it touches that wick anywhere between, it opens at 7.65, anywhere between 7.65 and 7.90, then over a period of a couple of weeks, there's a real good chance that it's going to get to the high of 7.92 back on the 13th of May to complete that the cup formation. Now, the other thing about this cup formation is that the MACD is expanding. The stochastics at 90%. It's a very wobbly and wiggly type of move, but the power, the momentum at this point is to the upside. Well, I should have asked you, what are you doing? But I suspect you're looking at the long side, right?
Yeah, I'm not involved right now. I was going to ask you what you would do. Would you buy it now, wait for a pullback, adhere, or
as it stands right now, that's a really easy decision for me to make. Let me just finish putting the notation here. Trough A, trough B, trough C, trough D, trough E, right there in the 5s. I put an up arrow because all the technicals are in. It's in a buy mode, and it says that it should go to at least a D. So if you treat it that way, I'm going to make the suggestion, and I know that you're very contemplative when you put on trades. You don't just rush. Think about it. I would consider putting it on right in this area, between at the 7.17, maybe to pull back to 7.15, but somewhere in this area, I'd put on a small position. And I would say, usually I say a very small position, but I'm going to suggest that it's a little more than small. I'm going to say not a large position, not a very small position, but if you were going to buy X number of shares, then I would say put on about half of that position right now. Here's my thinking, that the momentum in the weekly and the daily are in unison. Although the technicals, the stochastic in the weekly chart has still got a long way to go, but they are moving up. If I'm wrong, I'm going to say to you, I know it's a big percentage move because it's such a low price stock, 750. Remember, there's a difference between cheap and low price. This is a low price stock. I have no idea about its value in terms of its intrinsic value. So to me, it's just a low price stock. It might be cheap relative to other things, I don't know. But at this point, the price is down in the 7s, the single digits. But if it takes out the 666 low of yesterday, I would suggest that the 642 level is going to be very critical to hold that 9-period exponential moving average. But I don't think it's going to do that before it tries to go a little higher. So I'm going to suggest that 717, well, now it's moving up. Somebody's listening to us. I like it. I think it's a great entry, and I would not be afraid to put on more than a small position, but I would not put a large position. So that's my stance right now. If it starts to move, the reason why I want you to start it now, because it'll have a lot of resistance in the 770 to $8 to 7. What did I say? It was 792 area. That previous left side high. But once you're in the position, we can start to see how the weekly is starting to move, and even if the monthly is starting to move, are these rare metals and the metals in general going to have a fabulous move now that they're beaten down so badly? Well, my suspicion is that it's going to be a bumpy ride because there are still so many sellers that it could be a bumpy ride, but the trajectory should be to the upside, number one. Number two is I don't know yet about time and price. All I can say is that this started its move way earlier than the other metals. It started its move back on, back on the 19th of the week of the 19th of April. So it's making, if it breaks above 792, it's starting to make higher highs and higher lows. What's the definition of a bull phase? Higher highs and higher lows. What's the definition of a bear phase? As it was in lower lows, lower highs, lower lows, lower highs, just continuously. So this could be a change, and that's the reason why I'm suggesting, I would get into it, and I would not do anything about that position other than to say that if it breaks 643, would I want to take a little bit off because I don't want to have the peril of it going all the way back to the fives again? I'd give it a little room. I'd say give me a call before you do anything if you're in it and it starts to break down. But you'll know by Monday afternoon, Tuesday, if it breaks today's low, then it's going to be a more difficult ride to the upside. If it holds well, closes nicely today, you're in the trade and you're in a nice trade, and you can give yourself a little bit more leeway. To add to the position, I have to wait for the weekly close today, and then I might even have to wait for another week for the weekly close. But so far, it's acting very nice as a strong counter-trend rally. Hope that helps you.
Yep. Thank you very much.
Thank you very much for calling. So, folks, the Dow is unch right now, and the S&P's down 142. I just love that indicator, the Chapman wave trend gauge. It just tells you so much. We have been at times, we've seen the futures are up 10, 11, 12 points before the market opens, and that indicator flashed the day before. This one has to work the very next day, preferably early in the morning. And all of a sudden the market pulls back and it goes negative, even if it bounces back after that. There's another technique that I use. It's also the Chapman wave trend gauge, and it uses it in a different way. It gives it 1 to 2 days to have a very powerful rally that starts in the futures, usually overnight, and then carries over into the cash position. So I had a question, would I look at PALL? Now, I've looked at PALL for a long time. I used to have it all notated beautifully in the Chapman wave. It was on a different it was on the black background. I don't have that right now, so I'll just do this real quickly. Weekly chart on this is ETFs, physical palladium shares. You know, I've looked at this so often over the years, but I didn't do anything with it recently. I'll do it right now. ABC, D, E, F, double top. Pulls back, brand new A. Okay, hits the 200-period exponential moving average. Wonderful. Starts a brand new A. I don't think it's been out long enough. No, it hasn't been out long enough to give me a long-term monthly. So the long-term monthly, it goes to peak A, B minus fails, again to A, fails, comes down, starts an A to B minus and fails. So this is ETFs, physical palladium shares, PALL is the symbol. Excuse me. Trading at 70.32, up 4 cents. And now we're going to get to the daily. Now, a lot of these charts look like this. A to B, nice action. Let me just finish the chart. Take you 1 second. You'll be able to follow me. Look, I'm looking at the trough, and all I do is say, okay, most identifiable low bar. Start counting the peaks. That's not a peak. It has to make a peak after the low bar is established. You don't know that's a low bar until the next bar has a higher low bar. The whole bar is higher. Now you can start the count. It goes A, it goes B, C, D, and then it has what I call a Chapman wave instant restart. Let me see if that can work. Is that correct? It has the potential for that. I'm not going to put it in just yet. I'm just going to say that would be the potential. I'm going to circle it. That's a technique that we use. You don't need it. All you're going to do is have parallel wave counts, and they're going to go E. Yep, that's E/A, F/B, and it goes to a G, a rare G. And that G is a top, and it pulls back very sharply. Retest the left side low of 63.80 on the 15th of April, breaks it, closes below it. That's usually a negative. It says if you're going to rally, you're going to have to rally sharply to get above the left side peak of significance. And if you do that, that's very bullish, because you should fail at or under, but not above, this particular high of 75.52. It's 5 points away, and it's going to be. So I like it. I like this pattern here. I call it the Chapman wave squash between the MACD and the stochastic, but I like it only if I can see leg C break above 71.09 if there's no new high today, and spiral. That C has to be very sharp. So I like it. If you're long, stay in the position. So these metals, all the metal, all the soft metals, are they hard metals? Anyway, the liquids seem to be doing well. The palladium, I shouldn't call it liquids, it's not true. I'm thinking of when they melted down. But this is palladium, and I like the chart. I think it's a chart, but I'm only liking it in terms of a move that I need enough evidence that the technicals are turning around in the weekly, and that can only happen if it starts to get into the body of the candle on the 14th of June, somewhere between 75.52 and 71.11, and it's already hit 71.09. So it's coming into that breakdown candle. That's going to be really important. If it can hold there, then all of a sudden I can draw a trend line that says, aha, that's. Actually, I like to make it as conservative as possible. In this case, I go to the body of the candles because I want to get down to the lowest resistance point possible. And that would say they're looking out over the coming weeks, 73.51. Let's call it 73.60 needs to be taken out, and then it's going to be very positive. If it breaks down below 6, it's at 70.32. If it breaks down below 68, that'll be very poor action. If it holds above 69.10 to 68.80 and then pushes even higher, that would be nice consolidation, stair-step move to the upside. So that was important. Now, I also want to tell you that coming up, I'll remind you again at the hour, I won't be here for the next hour. Why? Because we've got the bull-bear binary option hour brought to you by Nadex. That's with Tom and Daryl. That is a fantastic show. Please stay tuned for that. Hey, and then stay tuned for my show at 11 o'clock. It's called the Tiger Technicians Hour. So this is what I want you to tell you. There are a couple of things happening here in the market. One of the things that I put a great deal of import into is the volatility index. And that VIX right now is at 13.93. That is buying pressure. I'll be back. Basil Chapman sitting for Steve Rhodes, 877-927-6648. We got plenty of time for calls still. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Basil Chapman, the host of Tiger Technicians Hour, sitting in for Steve Rhodes. Forgot about that for a moment. And it is my pleasure to be here. And what I'm just doing this quickly. All right, next caller we've got online is, in fact, Dave in Boston. Hi, Dave. How are you?
Good morning, Basil. I'm doing great. How are things with yourself?
Yes, very good. Thank you.
That's good. Just looking at oil and the say the broad term here, kind of looking at the dollar as to where we thought commodities might go with the dollar going higher. It just doesn't seem to be doing that.
So what position would you have, what would you want to be looking at in terms of a trade? Your question is, if the dollar is going to be pulling back, is there a good chance that oil could do what?
The dollar pulling back, the oil going higher.
Okay, that's what they were working in concert in the same direction just up until recently, which is very unusual. Now, what I'm looking at is this. So, if I am to do an analysis of the DIG, let's just say, which is the Ultra Oil and Gas Pro shares, then what I'm looking at is this is leg C. It should have a peak D coming up, and it is still way underneath the previous high of 61.70, but it did hit the 200-period exponential moving average, which is really a great resource if ever anyone wants to look at a particular technique in a particular time frame. The 200 EMA is really important to my work. Now, what's important also is that I've called this peak E, and then a right arm extension F that's pulled back in the weekly chart and spiral back up very quickly. The technicals say, I don't yet have any confirmation that the rally can continue to the previous high of 60. What did I say? It was 61. 6170. That was made the week of the 24th of May. The monthly chart is actually improving a lot, and it's got the pattern that I love to look at and talk about. It's like a rectangle pattern. It's like a flag pattern in a way, and within it you should get a Chapman wave, buy signal that goes at least to a D, but it could even go higher, and it goes from the low bar, especially if it's in a stair-step move making higher highs and higher lows. It should attempt to get to, at, or just above the previous major high, and that was 63.63 back in April of 2011. So if you're looking at this, what I'm looking at altogether is that it is getting close to resistance, and the wick of the candle of May at 6170 is really going to be the test, because if it breaks above that and closes, you will get that full rectangle formation going towards, and maybe even a tad higher. So where would it fail? It would fail if DIG, I'm looking at, folks, I meant to mention the symbol is DIG that I'm looking at, DIG, at 5906. That's got that pattern. You remember I've spoken about it. I showed it just a moment ago. It's very clear. Look at this. It's that falling axe. It's a declining cone, expanding cone, and that's already broken above it. That says, on a shorter-term basis, the key support to look at, if there's a breakdown over the next 5 to 7 sessions, the support would be at about 55.65. It sounds like 2.5 points is not much, but when it's in an uptrend, it doesn't have to pull back much, because 57.43 is the 9-period exponential moving average. So here's my take. The dollar, I think, is just having a counter-trend bounce, a big bounce, but not as big as the decline from the 85, what was that, 84.75 high it was just made. So I'm going to do this. Actually, I would like to spend a little time to do an analysis of this. I'm going to do that after my show finishes, which is this show finishes, and then on my show I will come back. I'll talk about the relationships that I'm looking at, and I'll include oil if you don't mind. Say at 11 o'clock, if you're around and you can listen. I would not do anything yet in any case, but we can talk about it. Monday might be the opportunity to do some buying. So thanks for being here, and maybe if you want to call me back, I'll do it in the 11 o'clock.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there. Whether it be our health, career, or our finances, some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.